Hi there, accountants. I hope all is well, and I pray that as you're viewing this video, that you're in the best of health and spirit. So this video will cover Chapter 3 from QuickBooks Online Accountant 7th edition by Glenn Owens. So in Chapter 3, we'll set up a new company, establish a chart of accounts, the beginning balances, customers, vendors, and product services. So upon completion of this chapter, the student will be able to do the following: log into their account, change company settings, modify the chart of accounts, establish beginning balances, and create new customers, vendors, products, and services, close opening balance equity, and create and print a balance sheet, create, print, and export a transaction detail by account report. So here's an overview. In Chapter 2, we began the process where we created our account and provided basic information about Wild Water Sports Company, including the company name, address, industry type, etc. So now we're going to revisit the Wild Water Sports Company that we worked on in Chapter 2, and each of the following chapters will work the same way. So to begin, we'll navigate our browser to the company, and the text is going to demonstrate how certain tasks are completed, such as modifying defaults, adding a new account, adding a new transaction, etc. So these demonstrations are going to occur in the Wild Water Sports Company. Each section of every chapter is going to begin with a demonstration, and it's followed by completing an end of chapter case. And in the case, you're basically asked to perform tasks similar to those demonstrated in the Wild Water Sports Company, but now in a new case. And the purpose of it is to, basically get a better understanding of how to navigate QuickBooks, but more importantly, how to utilize QuickBooks. So one key thing is that after you make changes to Wild Water Sports in each chapter, it's critical to verify your work, and you do that by comparing the trial balance created at the end of each chapter with the trial balance figure shown at the end of chapter in this text. Because one thing we know about accounting is that if there's one error, it basically messes up everything that happens after. So you definitely want to double check and verify. So the first task is for us to update the Wild Water Sports Company settings. So we open our internet browser, and then we sign in. All right, so once we get signed in, step 3 asks us to click the gear icon to manage the settings. And again, anytime you want to close and open the navigation pane, we select those 3 lines up at the top. This is our gear icon here. So click the gear icon to manage settings. Then it's asking us to click on our account settings. And this is the first screen, the Wild Water Sports Company information as shown in figure 3.2. So we'll change the company's name, tax form, industry, etc. So click on the pencil icon in the company type section. So we scroll over and we click on the pencil. And then it's asking us to update the industry section. So we keep the tax form as a corporation. For the industry, it asks us to type in MISC, M-I-S-C. And then next we'll see a drop-down list. So this drop-down list appears, and we will select miscellaneous store retailer. So we scroll down. All right. So here in this case, it's showing, let's see the details, miscellaneous. All right, let's type in store. Or let's maybe type in retailers. As mentioned, there's some changes. All right, so I guess you have to type in all other miscellaneous store retailers. So in this case, type in retailer. So keep in mind, there might be some differences between the book. So I'll walk you through those differences. So the first difference is obviously that if you type in MISC, It does not pop up. We don't see miscellaneous store retailers. We see miscellaneous intermediation, all other miscellaneous manufacturing, all other miscellaneous crop, all other miscellaneous food manufacturing, etc. So we don't see retail. So instead of MISC, please type in retail. And then we will select all other miscellaneous store retailers. And we select save. Then we click the pencil icon in the company name section. So we input this information and we input the EIN, and the EIN is 99-685-4102. And we just want to double check. So 99-685-4102. It matches, so we select save. Then we view the sales, expenses, payments, time, and advance tabs, noting the default sections. We don't change anything, but again, it's basically just going through to see, okay, what's there, pretty much, just to familiarize yourself with the settings, the features for this company. So once we've modified the company's settings, it's time to modify the chart of accounts. So we select next. And then it's saying that we'll continue the use of our Wild Water Sports Company, referred to as WWS in the future, to learn the process of creating, modifying, and deleting accounts and establishing beginning balances. So we're continuing from above, so we don't need to open the file again. It's already open. So creating accounts and related beginning balances only occurs when we're utilizing QuickBooks Online for the first time and the business has been in operation for some time. So the transition to QuickBooks Online from a previous accounting system will indicate business events and balances that occurred prior to the first date of the QuickBooks Online use. So in this section, we'll be adding new checking, inventory, prepaid rent, long-term debt, and common stock accounts to the WWS company. We'll also be establishing beginning balances for checking, accounts receivable, prepaid rent, inventory, and accounts payable. So every time we add a beginning balance, an equal and opposite amount is recorded to the opening balance equity account, because again, in accounting, we know that it is double entry. So one transaction affects at minimum 2 accounts. So QuickBooks lets us establish a beginning amount for all these accounts using basic journal entries. We'll do that for some accounts, such as AR, accounts receivable, and AP, accounts payable. And for some other accounts, such as checking, inventory, etc., we can input the beginning balances when we set it up. Whenever we add a new account, the account type needs to be specified. Is it an asset? Is it a liability? Is it equity? Is it income? Is it expense? So we basically go through all of that. So now let's get started. So to begin, it states, let's add a new checking account with a beginning balance of 20,000. So we click done for our settings. We click the gear icon and we select chart of accounts under your company. So we're here at the chart of accounts and we select new. And then it asks us to fill in the information as we see on 3.5. So this is going to be a bank account. Again, as we see, there are some differences, but the same nonetheless. So the account name is checking. The account type is bank. The detail account, it's a checking account. The description, we don't need to complete that. And then here we need to input the balance. So the description, or the opening balance rather, as it lets us know. Let me see, it says 20,000. All right, so as of, let's see, click on the starting date and opening balance. It says start date of 25,000. I want to make sure that's correct. All right, so we start off with an opening balance of 25,000. And then the start date, it wants us to use 12/31/2026. All right, then we select save. And then we'll see the checking account has a balance of $25,000. So far we've added $25,000 to the assets of the WWS company as of 12/31/2026. So another thing that we'll realize is that the opening balance equity account also has been impacted. So if we scroll down, we see the opening balance equity is also impacted. So next it wants us to add a new product and a new service. So we view the chart of accounts and we note that the inventory account has a balance of 0. So if we scroll up, our inventory account has 0. So now we go to the gear icon. We select products and services. We select add an item. And the item type is inventory. And the name, as we see here, is Malibu Sunset LX. So type Malibu Sunset LX is a new product. Click the drop down arrow in the category text box item. Then we select add new. And we input category name is boats. And we select save. All right, so then it's asking us about the initial quantity on hand. We input 1. And it is as of 12/31/2026. And then we select inventory as the inventory asset account. And then it's asking us to type Malibu Sunset LX in the description and purchasing information text box. So Malibu Sunset LX. So for the sales price, so we do it for both. So the sales price is $60,000. And the cost is $48,000. And then for the income account will be sales. And for the cost of goods sold, for the expense, which is already there. All right. So then it asks to accept the taxable standard rate from the sales tax section. So scroll down, basic info, inventory, sales tax category, it's already there. Taxable standard rate. And then for our preferred vendor, as it shows us here, we select add new. And then we input the information for the company, Malibu Boats. And then we basically select save. If you have the company's information, the first name of, let's say there's someone that you specifically work with at Malibu Boats, you'll enter their name, their email, phone number, fax number, the website, the address, and things of that nature. So then once this is done, you select save. And again, it's just showing you what exactly it should show. We are adding our first inventory item of Malibu Sunset LX. So once we do this, we select save and new. And then now we select a service. So we change the item type. We input engine service. And then we would select the I sell this product service to my customer, and then uncheck the I purchase this product service from a vendor. So we uncheck that. We've typed in the engine service. So now we're going to type engine services description in the sales form box. So engine service. And then for the income account, services was already checked. For the price rate, it's $250. And then from there, we are good to go. Oh, let me actually add this, sorry. So this would be services. So it's a category, save. Okay, so one's already there, perfect. All right, perfect. So it's already here, so we're good to go. Okay. All right, so now we're pretty much good to go from here. Save and close. Then now the next stop, we go to our gear icon, select the chart of accounts. Then we select new. And then the name is service revenue. So as we realize, there are a few differences. So we basically work backwards. So we select income from the account type. Service fee / income. And then we type in service revenue. And then it asks us to return to our recently created service item by clicking the gear icon. So we save this. So we click the gear icon, we go to our products and services. We select edit for the engine service. And we change it to service revenue. So we can either, scroll down or we could type it in. So here we see service revenue. So we choose service revenue. And then we want to edit our sales tax. And we select non-taxable. So we finish with that. We select save and close. And then now we scroll down the list of products and services. We note the addition of the Malibu Sunset LX, which we see here, in addition to the engine service. So we click the gear icon, we click on chart of accounts, and now we note that the new balance in our inventory account shows $48,000. Before it was zero. So now it asks us, following the instructions for adding a new product above, we create a new product name, the Malibu Sportster LX with a sales price of $52,000, cost of $41,000. As of 12/31/26, there's an initial quantity of 3 on hand. So we essentially follow the same steps. Gear icon, products and services, and then from there you select new. The Malibu Sportster LX would be an inventory item. So you go through the same steps. This represents the sales, and this represents the purchasing. To create the service item, which is the diagnostic service, we select service, and we basically go through the same information. This is not, something we purchase, so it will just be for the sale information. So you follow those steps to update it, and then to make sure that what you've done is correct, you'll view the updated chart of accounts to see a $25,000 balance in checking, a new inventory balance of $172,800, and a new opening balance equity account of $197,800. So we'll move on to the next step. It's asking us to continue in the chart of accounts. So we select the gear icon, chart of accounts. All right, and now we'll scroll down to our long-term business loans account. All right. So here we see our long-term business loans, review register. Then from there, we select add journal entry. So we change the date to 12/31/26. The reference number remains as 1. And the payee, we type Chase Bank, and if it's not there, then we basically add the payee. So we add it. And Chase is a vendor, so we select save. Then we select opening balance equity, so we can scroll down, or we can simply type it in. So opening balance equity. And then we type $50,000 in the increase section. So 50,000 looks like this. Then we select save. Then we go back to the chart of accounts. We click view register for our prepaid expenses account. So we scroll up. We look at our prepaid expenses. We view register. And then from there, we add a deposit as of 12/31/2026. Our payee is Allstate Insurance. We add Allstate, they're our vendor. We select save. And then we use the drop down. We either, scroll, or we can just type opening balance equity. And we type 15,000 in the increase section. And then we select save. Back to the chart of accounts. Now it's asking us to go to the common stock account. So another thing that you can do instead of scrolling, you can filter by name, so you can actually type in common stock. And then that's another way to access it. We select view register. We add a journal entry as of 12/31/2026. We have 2 as a reference number. We type shareholders as the payees. We add it. This will be a vendor. We click save. We input the opening balance equity and an increase of 1,000. Save. And then now we go back to the navigation bar, and the navigation bar is asking us to click report. So we go to reports. Now it's asking us to type the trial balance to find a report. So we type in trial balance. All right, and we type in 01/01/2027. And then we run the report. All right, so there's going to be some differences between my numbers and yours because I didn't input the other 2 inventory, but just so for purposes of you guys getting a better understanding, to make sure that it ties, I'm going to input it. So I'll scroll back up to the other 2. So these 2 that were not input, so I'll input them quickly. We go to products and services. We add a new inventory item. This is the Malibu Sportster LX. It is an inventory item. The category is boats. The initial quantity on hand is 3. The inventory asset account is inventory. And this is as of 12/31/26. And for the sales price, all right. And the price is 52,000. And the income account, as we see here, is sales. The sales tax is the taxable standard rate for the purchasing. We input the same name, Malibu Sports There LX. The purchase cost, as it lets us know here, is $41,600. This is reflected in the cost of goods sold, and the preferred vendor is Malibu Boats. So save and new. So that's taking care of that. Now it's asking us to add the service. So the service is diagnostic service. This is not an inventory item, it is a service. So diagnostic service. And there's a price of $500. The income account is services, which is already, well, service revenue rather. So we'll type it in. So here we have our service revenue. And then for sales, it is considered non-taxable. So save and close. So now if we were to go back to those reports, we type in trial balance as of 01/01/27. All right. All right, so the inventory ties, they're saying there's $70,000 of accounts receivable. Oh, well, before we get there, rather, here we go. All right, so figure 3.11. Here, everything ties. We have checking of 25,000, inventory of 172,800, prepaid expenses of 15,000, long-term business loans of 50,000, common stock of 1,000, and the opening balance equity is 161,800. So everything ties. That lets you know that you did everything correct. So you select save customization. You select save. And then now we will begin setting up balances and accounts receivable and accounts payable by using the journal entries. So we click the plus new icon, plus new, and then in the other column, we select journal entry. So we input the date, 12/31/26. And we have journal entry number 3. So we select accounts receivable. Again, you can, use the drop down, or you can just type it in. Accounts receivable, there's a debit of 70,000. And type Refugio as a new customer. Then we select add, and we save the new customer. Next, we select accounts payable. Oh, sorry about that. We select accounts payable. And we type $56,000 in the credit column. And we type Malibu Boats. Malibu Boats is already there, so we just select it. And then we select opening equity balance, which will make up the 14,000. So our, screen looks like figure 3.12, 12/31/2026, journal entry number 3. We debit accounts receivable for 70,000, credit accounts payable for 56,000, and credit opening balance for 14,000. So again, there's some more details there to read through. We select save and close. And then from there, we go back to our reports. Well, in this case, we're already on the reports. So here it shows us the trial balance, all right? So now we see that there was an increase to accounts receivable of 70,000. We have accounts payable of 56,000, and our opening balance equity increased to 175,800. All right, so next is going to ask you to add some fixed assets. So we go to our gear icon, select chart of accounts. From the chart of accounts, we select new. We're going to input an asset. And then it says select fixed assets. And then from the detail type, it'll be fixed assets, other tools and equipment. We type equipment in the account name box. All right. And then now from there, it wants us to save it. Now the next step is for us to go to fix our fixed assets. Or equipment rather. Equipment. All right. So we go to our equipment. All right, we edit it. All right, so I think it would have been better. Yeah, that doesn't make sense. So let's add a new equipment. I'll do this over. So I'll just put equipment 2. Account type fixed assets. This is fixed asset, other tools. So with the first step, you can bypass that one. We'll do it this way, input the original cost, and then you have the starting date and opening balance. So it'll be 12/31/26. And then type in 40,000. So you need to input the original cost when you first set it up. So we're doing this equipment 2. All right, we input the original cost and as of date. So we click save. All right, and then next, we are going to set up an accumulated depreciation account. All right, so we're going to be making a fixed asset. All right, it's going to be a sub account. And the parent account will be equipment 2. And detail account is accumulated depreciation. And then we'll type in accumulated depreciation. We actually don't need to make it a sub account, so we can leave there. So accumulated depreciation. Starting date, opening balance, 12/31/26. And we will type 10,000. So it should basically, kind of look like this. Again, there are some, differences, but the key thing is that we save it under equipment. So then, yeah, we could save it under equipment 2. So in order to do that, we select make this a sub account. So we'll save it under equipment 2. We have it as accumulated depreciation. The account type is under our fixed assets. And it's not showing us the tax forms section. All right, so we'll just leave it as that. We have the opening balance of 10,000 and we have the date. So we select save. All right, and we move on to the next step. So the final step is in establishing beginning balances is to close out the opening equity as of 1/1/27 of 205,800. So we established a common stock account, and the only account left in corporation's equity is retained earnings. So retained earnings are the earnings generated from prior years less dividends. So we need to create a trial balance, which lists the debit or credit balance in all accounts as of a specific date. So we select the new icon. You select journal entry under other, 12/31/2026. We select the opening balance equity. for the 205,800. And then we select retained earnings and input the 205,800. So keep in mind, we use retained earnings since this company is a corporation. If it was a sole proprietorship, we would use owner's equity. So this is what our journal entry should look like. We select save and close. We go to our reports. And we could type in balance sheet, or balance sheet is one of the favorites. Either or, it's more than one way to access. So balance sheet as of 1/1/27. All right, we run the report. And this basically shows us an example of what we should see. So we have the checking account, accounts receivable, etc. Total liabilities and equity should be 312,800. So if you ever want to print the report, you select the printer button here. Close it. Well, I mean, you print it first, then close it. You select save customization. And then you say balance sheet as of 1/1/27. You select save. And you can also, export it. So to export it, it will be this option here. You can export it to Excel. And then after you export it rather to Excel, you save it. So that's an option. You can print it, export it, or you can email it. And the next page brings us to the trial balance. And as far as the work that we've completed, it says it influenced the company's trial balance. So as we see, everything that we did, every transaction that we completed, it had an impact on the trial balance, whether it was an increase or a decrease. So to create the trial balance, we go back to our reports, select the custom reports and select the trial balance, so that way we can see it. And we see now that the total is 322,800. So we compare it, both ties, so we are basically good to go. And in here, we have the option to create, print, and export a transaction detail by account. So if you ever want to do that, you go to reports from the navigation bar and to find a report name, we type in transaction detail by account. We scroll to the top and then we select custom. All right. Custom dates. We type 01/01/20, 12/31/30. And then we click run report. Or, if you just click it, everything will, pretty much update. And this is basically what you will see, all of the details for each account. Right? And then if you ever need to print this, again, you can export, you can print more actions. So this brings us to the end of how we would navigate chapter 3, setting up a new company. So in this chapter, using the Wild Water Sports Company, we modified the company settings, we added new accounts to the chart of accounts, and we added beginning balances where appropriate. We also added new customers, vendors, products, and services, and we closed the opening balance equity account. So now moving forward to the next chapter, you'll be able to add operating activities like sales receipts, invoices, and cash receipts. So as you can see in the video, some of the figures do not match what we see in QuickBooks because, of course, they're making changes, improving it daily. But keep in mind, you still essentially navigate it the same way, but some of the text looks a bit different. So like an example, when we were creating a brand new account, it doesn't look the same, but the information is still the same. You need to input the account name, the description, you need to input the opening balance, etc. So as you navigate it, don't find yourself getting frustrated because it's like this doesn't match exactly. The key thing is that the trial balance amounts need to tie, because that lets you know that you're reporting it rather correctly. All right. But just keep in mind that as you, view the the textbook and are actually working through QuickBooks, there are going to be some slight differences.